Hello there, Mavericks. This is Rob Reinhold, and it is November 3rd, and we are one day after the Fed meeting. And you know what? The market had the night to sleep on the Fed statement and the press conference, and it decided it really didn't like what it saw yesterday. So if we take a look at all the numbers here, we had the Dow down about 0.5%. Now, the Dow has been outperforming. It's only 30 stocks. But it has been outperforming, and really right until about the last 20 minutes of the day, the Dow was actually positive for the day. We did get a little sell-off right at the close, the S&P down 1%, NASDAQ was weak all day. If you take a look at the heat map, I mean, it is just ugly. Look at the big red in big cap tech. Microsoft, Apple, Google, Amazon, Meta, I mean, those things were down 4, 5, 6%. Now, I love this heat map because it shows the weighting that each stock has on the overall S&P 500. Just take a look at the four big ones: Microsoft, Apple, Google, Amazon. When those are all down, look how heavy that is going to be on the index. The index was actually fairly healthy. I mean, take a look at the rest of the index. I mean, you can see there's a lot of green in there. Yes, we did get a lot of red in financials. Financials had a bad day. But you know what? If we take a look at the advanced decline line, it was 60% of stocks went down. So it was an ugly day, but it wasn't as ugly as it really seemed. Look, I'm not trying to paint this a pretty picture. It was a nasty day, and this market is most likely going lower. And if we really take a look at what is driving it, it is the US dollar and bond yields. So the US dollar and the bond yields have now risen 2 days in a row. If this keeps going, the market's going to keep going lower. This really is the key to the market, the dollar and bond yields. And it's really because they didn't like what they heard from Chairman Powell, especially at the press conference yesterday, where the market was kind of thinking that they backed off. And then once the press conference started, it showed that Powell is not going to back off whatsoever. So let's take a look at the charts on the market. And you can see today we had a gap down. However, there really wasn't any follow-through in selling. You can see all we got was a doji today. So this is a down 1% day, a gap down 1%. But today there was an equilibrium of buyers and sellers. And that's what I want to kind of point out, is saying, okay, look, when we take a look at the heat map, when we take a look at this candle, it's not telling us there's a ton of selling. However, then we go over to the NASDAQ, and it is a different story. The NASDAQ is in serious trouble here. And we're looking to break down below the lows that we set just a couple weeks ago. It just looks really bad. So remember about a week ago, I actually was posing the question, the NASDAQ was underperforming, it was weak, and the S&P and the Dow were outperforming. And I asked the question, is the rest of the market going to pull tech up? Or is tech going to pull the rest of the market down? And last week, the answer was it was holding tech up. This week, tech is by far the weakest part of the entire market. And just go back to the heat map. If this continues, this market's in trouble. If Apple, Amazon, Google keep falling 2, 3, 4% a day, I don't care what the rest of the stocks do, this market is going lower. And that's what it looks like is going to happen. That's the trend right now, is that tech and big cap tech is in some real trouble. Now, we had just updated our outlook to slightly positive as we poked above the moving average, and we've just got to downgrade everything. We are back down below that 50-day moving average, so now we're moving to a -1. We're right at that 20-period moving average, so we'll see what's happening here. But as you can see here, this market does not look good. It looks like the markets want to go down and retest lows, especially the NASDAQ. Now, take a look at how much distance there is to the lows on the S&P. I mean, we've got a lot of distance. The NASDAQ is like 1 or 2 days away. We're actually quite a bit away on the S&P. So I think the NASDAQ does go down and break through its low. And I think the S&P comes down and tests that low. That's what I'm looking at near term as the most likely scenario to happen. So that being said, I'm back to more bearish. And I got to say, this week was a very big pivot. I had just pivoted to slightly bullish in my overall leaning. And after the press conference and yesterday's candle, I had to quickly pivot yesterday and today to be more bearish. So there's lots of bearish stuff that I've got to share with you. But let's take a look at one lone bull here. This is a trade from our traders when we meet on Wednesday together. STNG, this is a shipping company. And you can see here, it forgot to get the memo that today was a weekday. It forgot to get the memo that we're approaching the lows for the year. This thing has broken out and is moving higher, up 4% for today. This is definitely showing outperformance. Look, whenever you have a market that's really going lower and you have some bulls, you can't be really bullish on them, but you can actually still make some money off these. You know, a bull put spread is a great pick, maybe a 52.50 bull put spread, just saying, hey, I think it's going to hold above $50 a share. As long as it does, that's going to be a nice little trade for you. On a sideways note, this is also from our Wednesday session together. One of our traders shared LVS as a sideways stock. Now, this is what you want to see on a sideways play. The market had crazy volatility. The market went up and down yesterday. Look at what happened yesterday to this one. This is Las Vegas Sands. Nothing happened. It's so boring. No one really even cared about this stock. This is exactly what you want for a sideways. We've got support down here at 35. We got resistance up here around 40. I think you just stay right in this range with either a condor, a butterfly, a horizontal spread, something like that to capture some sideways movement. Let's get into the bears because I found a ton of bears. I mean, more than I can have time to show everyone. But this was also from Wednesday's session. One of our traders says, hey, you know what? CrowdStrike is looking good. So entered on this day. You can see some nice follow through down 4.3% today. And we are down below October's lows. What you want to do is you want to find the stocks that have broken October lows already. These are the ones that were weaker than even the worst tech stocks. So this one to me looks good. I don't see any reason why this thing doesn't make it down to around the 132 area. Would kind of be my target. If I look at drawing a trend line here, 132, a target on CrowdStrike. So great call on this one to one of our traders. Another trade from yesterday was short in the ARK fund. This is the Kathy Woods ARK fund. This is basically a fund that owns a bunch of these technology stocks that are going lower. I did want to pull up this chart because take a look at today's candle. Today's candle was a green candle, meaning it gapped down, but there was actually more buyers than sellers. Now, this is what you don't want to see when you have a short on. This is telling you, there is actually some people in there buying. Now, look, we're at some major support here. Somewhere in this area is going to be some major support. I think this thing is still doomed, but this candle is telling me, hey, there was at least some buyers in there today. Now, look, one candle doesn't mean anything because if we get a big fat red candle tomorrow, that was nothing. And we've seen times where we had green candles in down movements. Look, it happens. So, don't overreact if you got into it. But if you get a red candle tomorrow, then you can say, okay, well, you know what? I don't have to overthink this. This is most likely headed lower. As far as some new trades here, we have Affirm. This is in the financial sector. Financials really got hit today. And this one has been an underperformer for a while here. We got this low base going on here. And you can see we broke down below that low base. Looking to go significantly lower. I've got 15 as my target. So I'm looking at a 15-17 bear call spread. And I'm going to give that about a week and a half to next Friday. So lots of stuff on the bear side. So let's talk about tomorrow. Tomorrow's a Friday. As I've always said, markets rarely bottom out on Fridays. So I think we're probably looking to be flat to lower tomorrow. The key to this market is bond yields and the US dollar. Every time the US dollar sells off, the market rallies. And bond yields pull back, market rallies. Until that happens, we are going to be in a downward trend in the broad market. We need to see those change. If those keep going higher, the market's going to keep going lower. It's as simple as that. That's what's driving this entire move. Tomorrow morning, we do have the payroll report. So the jobs report, looking for 200,000 jobs, 3.5% unemployment, and plus 3% wage gain. We've been talking about this for the last 2 months. Good news is bad news, and bad news is good news right now. If the number is better than expected, typically that's a good thing for stocks. Stocks like better than expected numbers. Not this time. If this payroll report comes out and there was 250, 300,000 jobs created, this market's going lower. No question about it. Because that means the Fed cannot back off. If for some reason this report comes out weaker than expected, so let's say it comes out as only 100,000 jobs created, all of a sudden that is actually going to give the market reason to rally. Because again, that's going to mean the dollar falls, yields fall, which means stocks can rally. I don't think that's going to happen, but we never know until we get the numbers. That's going to come out tomorrow at 8:30 a.m. Eastern Time, and the futures will definitely show you what the market thinks about that before the market opens. Now, we do have some earnings after the bell I want to go over. I'm going to throw them up here. So it's kind of a mixed bag here. We've got half of the stocks having a nice move after earnings. So we have Square, DoorDash, Microchip Technologies, Monster Beverage Corp. They're all up very nicely. However, we have just as many stocks down nicely to the downside as well. So Tech Stock, Team, we got Twilio, Cloudflare, Carvana, they're all down anywhere from 9 to 22%. So this is telling me it's a mixed bag, meaning I think we're probably going to have flat futures overnight. And then once the payrolls report comes out, then you know what? Then it's going to be a big movement after that. So this market is going to go gap up or down at least 1% tomorrow, in my opinion. I think we're going to get at least 1% gap up or down based on what happens at 8:30 a.m. That is the Market Roundup. Thanks for joining me. Take care.